This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The downturn in China is something that could quickly spread regionally. But first up today, the rise in retail sales at physical stores in the US was 4.7% higher last week, off the pace of the prior week's 5.1% gain, but still a healthy economic sign and well above inflation's level. Speaking of inflation, American producer prices rose less than expected in July from June to be 2.2% higher than year-ago levels. These muted increases raise bets of a softer CPI result tomorrow, backing expectations of a Fed rate cut next month. Equity markets responded like this. And the NFIB Small Business Optimism Index in the US jumped in July from June to its highest level since February 2022. It is recovering fast from quite low levels in early 2024 and is now 2% higher than year-ago levels. And Japanese machine tool orders rose 8.4% year-on-year in July, slowing from a 9.7% growth in the previous month. This was built on an almost 18% jump in orders from export customers. In China, their official media is talking up a story that says Beijing should provide additional direct support to consumers worth at least $1 trillion yuan, either in cash or as vouchers for the rest of 2024, to, quote, effectively address the pressing challenge of lackluster domestic demand, unquote. And overnight, China released its July new yuan loan data that was especially weak. Bank customers are wary of borrowing in their stunted market, despite top-down pressure on banks to push out loans. Chinese banks extended just 260 billion in new yuan loans in July, the least since October 2009. For a country the size of China, that is an amazingly low level. And we don't often report on South Africa, but today we should probably note that their unemployment rate rose to 33.5% in the second quarter of 2024, the highest in 2 years, and up from 32.9% in the prior quarter. That was a surprise deterioration because analysts had expected it to ease. The number of workers jobless rose by 158,000, reaching 8.4 million, marking the highest figure since comparable reports began in 2008. They are in a tough spot. In Europe, there was a sharp and unexpected fall in overall economic sentiment in August, according to a widely watched ZEW survey. But that is off a recent surge, taking it back to just 2021 levels. In Australia, the Westpac Melbourne Institute Consumer Sentiment Index rose from the prior month to a 6-month high in August, although it is still at quite a low level. Views on family finance bounced back from the last month but remain weak, but there were some clearer signs of support from tax cuts and fiscal measures. Consumers seem less worried about further rate increases than last month, and Aussies are still untroubled by their jobs outlook. However, home buyer sentiment sank to new lows as price expectations cooled noticeably. Australian business sentiment, though, is still positive, even if it did ease in July from June's positive reading, which was revised down a bit. The US Treasury 10-year yield is now at 3.86% and down 5 basis points from yesterday. And the price of gold will start today down a minor $3 at $2,465 an ounce. And oil prices are $1 softer at $77.50 a barrel in the US, while the international Brent price is now just on $80.50 a barrel. This pullback comes after the IEA warned of a looming crude oil surplus. And the Kiwi dollar starts today up 0.5 cent from this time yesterday at 60.7 US cents. Against the Aussie, we're up 20 basis points at 91.6 Australian cents. Against the euro, also up 20 basis points at 55.3 euro cents. That all means our trade-weighted index starts today at 69.2 and up 30 basis points. And the Bitcoin price starts today at $61,392 and up 3.5% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.6%. Join us at 2 o'clock this afternoon for our coverage of the RBNZ's monetary policy statement and the latest on the official cash rate. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.